Thank you all for attending our second GHY University webinar of 2015. This course will provide a how-to guide for importing into Canada, giving you tips and showing you the risks. After the presentation, we will be sending out a copy of the presentation slide deck, the recording of this webinar, along with a survey to help us better your GHY University experience for future webinars. If you wish to post on social media about this presentation, please do, but we kindly ask that you use the hashtag GHYU. Today's GHYU webinar will be presented by our own account representative, Valerie Michaud. Valerie brings 22 years of trade facilitation experience across all modes of transport. She holds both a Certificate Customs Specialist, CCS, and Certified Trade Compliance Specialist, CTCS designations. Brittany King, a fellow team member who is currently enrolled in an Introductory Customs course through the CSCB, will co-present. Without further ado, allow me to pass it over to Valerie and Brittany.
Thank you, Maria, for the introduction. Good afternoon and welcome to today's webinar on the basics of importing into Canada. Before we dive into importing, I want to share with you some information on GHY International. GHY manages more than $5 billion cross-border trade annually through our Canadian and U.S. brokerage operations. We pay more than $100 million annually to governments on behalf of our clients, and we work with more than 1,000 importers and exporters. Growth and continuity through 4 successive generations is an incredible milestone. GHY has achieved it thanks to the dedicated people delivering quality service to great customers. It is a testament to the power of the highest level of commitment, professionalism, and integrity. Care principles. We care about making life easier for our clients, from finding better, more efficient ways to bring shipments over the border to stepping up at the moments of truth to change the course of someone's day. We care about building a positive workplace culture, which has been a priority for generations at GHY, and we make every effort to ensure manageable levels of stress for all our team members. This includes having enough associates to do the job right. We care about finding creative ways to drive innovation and push the boundaries of what it means to be a customs broker. Most importantly, we strive to understand our clients and share our collective knowledge to help them succeed at global trade. We are committed to going the extra mile to provide the best service and trade solutions possible. To do so, we invest time and resources into training and equip our associates with the technologies and tools they need to excel. This is a great way for new importers to learn some basic steps of importing into Canada, or for some experienced importers who are looking for a different perspective of the latest information about customs and trade regulations. This session has been designed to overview the basic requirements in the importation process, which in itself is multifaceted. Canada is the second largest country in the world. It covers over 9 million square kilometers. Canada's trade of goods annually includes over 15 million commercial shipments, over 36 million courier shipments, over 44 million postal shipments, and in addition includes over 100 million travelers crossing our border on an annual basis. Canada Border Service Agency, CBSA, is responsible for providing integrated border services that support national security and public safety priorities and facilitates the free flow of persons and goods, including animals and plants, which meet all requirements under the program legislation. Another name for Canada Border Service Agency is Canada Customs. Most importers are unaware there is an additional support system for the officers at the border. Integrated Commercial Enforcement Compliance Assurance Process, aka ICECAP, is a program that provides focus on enforcement of targeted areas. ICECAP is a network of senior officers, trade compliance working in conjunction with border service officers, superintendents, intelligence officers, investigations, and representatives of other government departments. A modified version of the intelligence cycle is used to identify and target non-contraband commodities/entities which possess high-risk characteristics prior to release. They look at tariff classifications, origin, tariff treatment, value, and OGD concerns. They analyze risks relating to issues pertaining to importers. Through liaison with intelligence, ICE cap officers may put targets into a cross that may result in examinations by BSOs/trade at the port of export. The examination results are collected and analyzed. Customs face the same challenges as other businesses in doing more for less. With commercial imports increasing by 13%, Customs are positioning some key strategic products in such a manner to facilitate trade while managing security and risk. Some of the projects are eManifest, FAST, CARM, and Single Window Initiative. Here are a few examples of Customs initiatives that are taking place. Some are still in the beginning stages and not all kinks are worked out yet. eManifest will require all carriers, freight forwarders, and importers to send advanced commercial information about their shipments electronically to the Customs. The collection and risk assessment of pre-arrival data will improve the Customs' ability to detect high-risk shipments before they arrive at the border. At the same time, low-risk, legitimate trade will be able to cross the border more efficiently. Customs will communicate when regulations to enforce eManifest requirements for highway carriers. They are expected to be in place once confirmed and at least 45 days in advance of the mandatory compliance date. Free and secure trade expedites movement for pre-screened commercial drivers through dedicated lanes. Single Window Initiative will assist information exchange and clearances across multiple departments. This will minimize the processing required at the physical border, streamlining the clearance process and reducing border congestion. This will eliminate repetitive keying of examination results into multiple applications. The officer will not have to make multiple decisions on the same shipment. This slide illustrates the parties in the supply chain. However, even with each basic step, there are sub-processes, timelines, and responsibilities, including what happens. The three main steps to remember are before the border, at the border, and after the border. The journey starts with the importer and will end with the importer. The importer is accountable for most, if not all, declarations involving the goods. If any member of the supply chain makes a clerical error, it can result in financial penalties levied against the importer. The first step starts with the importer. The importer will require a business number. A business number is used for major government revenue programs such as GST, goods and service taxes, payroll deduction, and corporate income tax. Customs will use your import-export account number to process customs documents. When a shipment reaches Canada, the party who is responsible for clearing the goods through customs is known as the importer of record. The importer must file an electronic declaration in advance of the goods at the port of entry. The advanced declaration will form customs basis to evaluate the importer's use of reason to believe as well as an assessment of legal liability related to the entry. Most importers, in fact more than 270,000 importers, use the service of a broker for advanced declaration filing. Today's business trade is a 7/24, 365-day affair. Brokers must have resourcing and systems on a round-the-clock basis. When using a broker for declarations, importers must set clear parameters for the filing of their declarations. The importer must know the requirements before ordering or shipping the goods into Canada. The importer should gather as much information as possible about the goods you intend to import. Obtain descriptive literature, product composition information, and whenever possible, a product sample. The importer must research what types of documents are required, any import permits, any special license required, quota controlled, and if the product is allowed into Canada. The importer will have to take into consideration the nature of the product, as it will affect the amount of paperwork needed to be complete and may add to the cost of importing the goods. Identify the country where your goods originate. It is important to remember that this does not simply mean the country from which the product was shipped to you. It may also include where individual parts of the product are from, as well as where it is assembled into the final product. Certain goods are not allowed to be imported into Canada. Some examples are pornography, hate propaganda, used mattresses, and some automobiles. Even goods that would appear to be eligible, example wood flooring, may be illegal for importation into Canada. In 2012, it was recognized that the largest U.S. manufacturers in the world were shipping illegal goods into Canada, as reported in the Wall Street Journal. Goods produced by prison labor are considered contraband in Canada. Many goods are subject to the requirements of other government departments and agencies and may require permits, certificates, and maybe even inspection. Customs is responsible for administrating the legislative import requirements on behalf of other government departments. Please consult D19 series Acts and Regulations of other government departments. Customs requires certain goods to be clearly marked with the country of origin. Please note the province of Quebec have different marking rules. This can be found in D Memo D11-1-3, Marking of Imported Goods. Once the importer has checked off all the requirements, the importer will place the order with the supplier. The second step is the supplier. Supplier/vendor declarations have a direct impact on importers' cross-border supply chains, profitability, and brand reputation. The supplier/vendor will supply a copy of all invoices, bill of lading, NAFTA, or any other documents required by any other government departments at the time of release or before the product enters into Canada. The supplier will give all documents to the carrier. Although the CBSA is willing to accept importer or owner-prepared documentation to assist in obtaining release of commercial shipments, supporting evidence may be necessary. The commercial invoice provided should contain all relevant data elements needed. It should contain a detailed description, value, quantity, unit price, total value, currency, total pieces, and weight and origin. The commercial invoice is the main document that Customs relies on to provide this evidence. Here is an example of a Canada Customs invoice. The main fields that I would focus on is the vendor, consignee, purchaser, date of direct shipment to Canada, other references, origin, detailed description, quantity, unit of price, total price, currency, number of packages, and total weight. The vendor could be the seller, sold by, remit to, consigner, and shipper. Please indicate a complete name and address of the party selling the goods to the purchaser. The purchaser's name is the last known entity to which the merchandise is sold, leased, or otherwise transacted. The consignee is the name and address of the party to which the goods are being shipped. The date of direct shipment is the date of the goods began their journey to Canada. Other references is used to record a purchase order number or invoice number. Country of origin is where the goods have been grown, produced, or manufactured. The third step is the carrier. With the implementation of e-manifest, carriers transporting goods into Canada are required to transmit cargo and conveyance data electronically to the customs prior to the arrival. The carrier is required to give a copy of all documents to importer/customs broker. For highway shipments, the carrier applies the PARS barcode on the bill of lading. The carrier must indicate the port of entry, date, and time. The carrier can fax or email paperwork to the broker. Once the carrier arrives at the border, they must provide Customs the original PARS barcode along with a copy of invoices. Customs will check with the information in their system. At this point, Customs will decide to release or examine the goods. The next slide will show how e-manifest works with all parties involved. Here is a flowchart on CBSA's e-manifest initiative. The ACI program is about providing customs officers with electronic pre-arrival information so that they are equipped with the right information at the right time to identify health, safety, and security threats related to commercial goods before the goods arrive in Canada. eManifest is modernizing and improving cross-border commercial processes. When fully implemented, eManifest will require all carriers, freight forwarders, and importers to send advanced commercial information about their shipments electronically to customs. The collection and risk assessment of pre-arrival data will improve the customs' ability to detect high-risk shipments before they arrive at the border. At the same time, low-risk, legitimate trade will be able to cross the border more efficiently. eManifest makes Canada's border process more secure and compatible with North America and international standards, which is important for the business community and for Canada as a whole. The fourth step is the customs broker. More than 95% of the importers rely on the services of a licensed customs broker to get their shipments cleared at the border. For each of these transactions, reams of critical business data must be generated about everything from country of origin and destinations to suppliers, tariff classifications, routings, and intended use. Importers rely on a customs broker to pull that information together and clear the goods through customs. Customs brokers are now helping importers leverage that information, transforming the data into critical business intelligence. Customs brokers offer a growing range of specialized services to help importers develop new product lines, explore new markets, evaluate the impact of global change, and cut costs. This slide shows what a broker does on behalf of the importer. In order to conduct business on behalf of an importer, the customs broker must obtain a general agency agreement, a power of attorney from the importer. This is a legal requirement of the CBSA. The fifth step is OGD, Other Government Departments and Agencies. This is in place to help ensure that prohibited and controlled goods are not illegally imported into Canada. The Canada Border Service Agency assists other federal government departments and agencies by administrating and enforcing legislation and regulations on their behalf. Inquiries about these importing regulations should be directed to the relevant department or agency. In fact, customs officers must collaborate and enforce on more than 90 acts of Parliament. Customs will wait till the other department sends a message to them that it is okay to proceed. Without their approval, Customs will not continue to the next step. Here are a few examples of other government departments and their main area of responsibility. This is in place to identify health, safety, and security threats related to commercial goods before the goods arrive in Canada. The next step is Canadian Border Service Agency. CBSA, another name is Customs. Here is a list of responsibilities of a customs officer performs. When the officer receives the information from the broker, he or she will decide to examine or release the goods. If the goods are controlled, regulated, or prohibited by any other government department or agency, Customs will not continue the clearance process till they get an okay from that department. Once Customs decides to release the goods, they will send an electronic release notification report back to the broker, carrier, and warehouse. This will authorize the carrier or warehouse to release the goods to the trucking company for delivery. The last step is back to the importer. Once the goods arrive at their dock, it's the importer's responsibility to make sure the goods received matches what the purchase order is. It's also important to remember that you are ultimately responsible for the accounting documentation, payment of duties and taxes, subsequent corrections such as redetermination of classification, origin, and valuation, even if you use the services of a broker. The next few slides will break down some of the wording that is important to know. All customs bonds are required by the federal government of Canada to guarantee excess taxes, tariffs, and payment of various duties. The bond allows for the immediate release of goods and various license regulations. The use of customs bonds enables transportation companies to move goods in Canada quickly and efficiently. Principals are provided an opportunity through customs bonds for the immediate release from customs of their imported goods prior to the financial determination and payment of required taxes, duties, and tariffs. Either the importer has their own bond or a broker has posted one to facilitate the flow of trade. The harmonized system came into effect in 1988 and has since been developed and maintained by the World Customs Organization, WCO. The harmonized system, HS, is a standardized coding system of names and numbers used in international trade. Over 200 countries, representing about 98% of the world trade, uses the HS code as a basis for customs tariffs and the compilation of international trade data and statistics. The harmonized schedule assigns up to a total of 8 digits at the tariff rate legal level. 2 extra digits may also be assigned as statistical reporting numbers for a total of 10 digits to be listed on entries. The tariff is complex. It does not line up with the commercial identity of the good. HS classification codes are based on the product's description, composition, primary function, and/or principal use. They will determine duty, taxes, and fees that are imposed. All products must fully classified prior to release. This will aid the government in compiling trade data. The tariff classification of a product will dictate the applicable rate of duty applied to the product being imported into Canada. Tariff classification numbers can be determined by 3 ways. Importers can consult the customs tariff, contact Border Information Service, BIS, and request an advance ruling. Customs valuation is a procedure applied to determine the customs value of imported goods. The value for duty is usually based on the transaction value method, which requires that goods are sold for export to Canada to a purchaser in Canada, and the price paid or payable for the goods can be determined. Under this method, the selling price, with certain additions and minus certain deductions converted to Canadian funds, will be the value for duty. For cases in which there is no transaction value or where the transaction value is not acceptable as the customs value because the price has been distorted as a result of certain conditions, there are 5 other methods of customs valuation to be applied in the prescribed order. The classification of the product will also determine if it is subject to quotas, any restraints, and also used to determine if or under any what circumstances a product may be entitled to special tariff preferences. The most common preference is NAFTA. A free trade agreement will enable you to compete on a more even playing field with local firms in the free trade agreement partner country. Under an FTA, a range of Canada goods and service benefit from the reduction or elimination of tariff and non-tariff barriers to trade, such as quotas or technical barriers. Canada has a free trade agreements in force with more than 10 countries, which provide a competitive advantage across a wide range of sectors. In addition, Canada has begun negotiations with more than 60 countries, including some of the world's key markets. In 1994, the North American Free Trade Agreement, NAFTA, came into effect, creating one of the world's largest free trade zones and laying the foundations for strong economic growth and rising prosperity for Canada, the United States, and Mexico. Since then, NAFTA has demonstrated how free trade increases wealth and competitiveness, delivering real benefits to families, farmers, workers, manufacturers, and consumers. Each NAFTA country forgoes tariffs on imported goods originating in other NAFTA countries. Rules of origin enable customs officials to decide which goods qualify for this preferential tariff treatment under NAFTA. The negotiators of the agreement sought to make the rules of origin very clear so as to provide certainty and predictability to producers, exporters, and importers. They also sought to ensure that NAFTA's benefits are not extended to goods imported from non-NAFTA countries that have undergone only minimal processing in North America. Please note, just because it's made in the United States does not mean it is qualified for NAFTA benefits. Certificate of origin must be completed and signed by the exporter of the goods. A NAFTA is only valid for 1 year. If the importer claims NAFTA and the item is not on the NAFTA, then Customs will issue a $1,000 AMP penalty plus duty and interest if applicable. Rules of origin are used to determine the country of origin of a product for purposes of international trade. There are two common types of rules of origin, preferential and non-preferential. The exact rules vary from country to country, from agreement to agreement. Preferential rules of origin are part of a free trade area. NAFTA is an example of a trade agreement that offers tariff concession for goods that originate according to its rules. Non-preferential rules of origin are used to determine the country of origin for purposes such as origin labeling, quotas, anti-dumping, anti-circumvention, and statistics. When a product is wholly obtained and produced in a single country, it is relatively easy to determine its origin. Difficulties arise in determining origin for goods manufactured in, assembled in, or using materials originating in more than one country. There are different methods that will establish the origin of goods that is manufactured in, assembled in, or using materials originating in more than one country. One method is substantial transformation, states that a good originates in the last country where it emerged from a given process with a distinctive name, character, or use. It's a new and different article. Second method is value-added rule. Ad valorem percentage test defines the degree of transformation required to confer origin on the good in terms of a minimum percentage of value that must come from the originating country or a maximum amount of value that can come from the use of imported parts and materials. The last method is change in tariff classification. It determines the origin of goods by specifying the change in tariff classification of the harmonized system of tariff. Nomenclature require conferring origin on a good. Certain goods, when imported into Canada, are required to be marked to indicate clearly the country in which the goods were made. The foreign exporter or producer usually applies the country of origin marking. However, Canadian importers are responsible for ensuring that imported goods comply with marking requirements at the time they import the goods. There are different methods used to determine the country of origin, depending on whether the goods are imported from NAFTA country or from a non-NAFTA country. There is a set of rules used to determine origin for NAFTA country. The following list is not all-inclusive and is only meant to provide a general guideline. The goods are wholly obtained or produced. The goods are produced exclusively from domestic materials. The foreign materials incorporated into the goods undergo a specific tariff classification change, or the single material that gives the goods their essential character was produced. The marking of imported goods regulations provides the authority where, under certain conditions, authorization may be granted to mark goods in Canada after they have been imported but before they are released from the CBSA. Whenever possible, importers should request such authorization before the goods arrive in Canada. Authorization may be granted for goods from either NAFTA or non-NAFTA countries. Failure to mark the goods in accordance with the marking requirements may result in the application of penalties. More information can be found in Schedule 1 contained in Appendix A. Certain types of goods or goods imported under specific conditions may be exempt from the requirement for country of origin marking. These exemptions are listed in Schedules 2 of the Determination of Country of Origin for the purpose of marking goods, NAFTA countries regulations, and the Determination of Country of Origin for the purpose of marking goods, non-NAFTA countries regulations. There are 21 exemptions that apply to goods imported from NAFTA and non-NAFTA countries. Importers, exporters, and producers are advised to contact the region where goods will be imported to obtain information regarding the use of exemptions. Depending on the circumstances involved, the party requesting information may be required to substantiate entitlement through the submission of the advance ruling request or by providing some form of written evidence supporting the use of exemption. Information on advance rulings is contained in the section entitled Advance Rulings. The specific exemption being requested should be identified at the time of release by means of written explanation to the Border Service Officer or a notion on the invoice. The officers will consult with the offices identified in D-Memo D11-4-16 in situations where it is not evident that the importer is entitled to use the exemption. This form is used to account for commercial goods importing into Canada. The fields that must be included in your is your importer name and the importer/exporter account number, BN number, a description of the goods, the direct shipment date, the tariff treatment or trade agreement, the country of origin, the tariff classification, the value of duty, the appropriate duty or tax rates, and the calculation of duties owing. The importer will have to present their final accounting package no later than 5 business days after release. If the importer doesn't present the accounting package, or if the broker's computer is unable to validate the package within the 5-day time period, Customs will charge the importer a late accounting penalty for each shipment of $100 Canadian. An importer has an obligation to file any corrections within 90 days of having a reason to believe that an incorrect declaration has been made. Reason to believe can take on a number of different forms. The importer may receive a NAFTA, certificate of origin, from the vendor after the goods were accounted for under the most favored nation rate instead of being duty-free. A NAFTA refund can be submitted up to a year from the date of importation. If the importer receives a corrected invoice from the vendor where the origin, tariff, value, or quantity is different than what has been declared, any of these can trigger the requirement for a correction to be filed with the Customs for the affected transaction or transactions. Corrections may be required from the earliest date of having reason to believe that an incorrect declaration has been made to a maximum of 4 years. The specific provisions that cover this can be found in the D-Memo D11-6-6. If it is discovered that corrections are required within the 90-day time limit, then they should be dealt with immediately. If it is discovered that corrections are required past the 90-day time limit, it may be to your advantage to file a voluntary disclosure. If Customs accepts a voluntary disclosure, it may mitigate the payment of AMPS penalties and punitive interest on the duty of taxes owing to the CBSA. AMPS is one of Customs enforcement tools should an error be made in declarations or record keeping at any time before, during, and after the border. The Administrative Monetary Penalty Systems, AMPS, is a civil penalty regime that secures compliance with Customs legislation through the application of monetary penalties. An AMPS authorizes the CBSA to assess monetary penalties for non-compliance with Customs legislative, regulatory, and program requirements. An AMPS applies to contraventions of the Customs Act and the Customs Tariff and the regulations under these acts, as well as the contraventions of the terms and conditions of licensing agreements and undertakings. The Customs may impose monetary penalties based on the type, frequency, and severity of the infraction. Most penalties are graduated and will take the compliance history of the client into consideration. AMPS does not impact businesses who comply with Customs requirements. Everyone who is involved in a commercial activity needs to keep a copy of the import and export of the product. All documents relating to the commercial shipments needs to be kept. An example is all invoices, shipping records, B3 accounting, proof of origin, advanced Customs rulings, sale or other disposal of the goods in Canada, and any adjustment to the value of the goods. The importer can maintain their records at the place of business in Canada. If they wish, their Customs broker or the accountant can maintain their records in Canada. The importer will require written authorization from CBSA. If the importer wishes to maintain their records outside of Canada, they must obtain a written authority from CBSA to do so. Where it is determined that an importer has failed to comply with any of the requirements for the maintenance of their records, the importer will request to fulfill these requirements within a reasonable period of time. If an importer fails to comply with the requirements of record maintenance, the customs may assess APS penalties or detain any goods imported by the importer until the importer has complied with all requirements. It is important to remember that the importer is ultimately responsible for the accounting documentation, payment of duties and taxes, and subsequent corrections such as redetermination of classification, origin, and valuation. Thank you for attending Basics of Importing into Canada.
Thank you very much, Valerie and Brittany, for that incredibly educational discussion, and thank you for attending today's GHY University webinar. If you would like more information or clarity regarding importing into Canada, please contact Valerie at valerie@ghy.com and or our consultation department at consulting@ghy.com. In addition to this, please feel free to connect with GHY International online via Facebook, LinkedIn, and or Twitter. To reiterate, we will be sending out a copy of this presentation slide deck, the recording of this webinar, along with a survey regarding your experience. Thank you for attending today, and please look for our upcoming webinar in September on Tools of the Trade. We hope you all have a great day.